On this episode of Pennies Going In Raw, we interview an Atlas legend, Brady Trades.
Hey, yo, check 1, 2. This is Flavor Flav in the building for the Atlas crew.
Atlas Trading, what the fuck is up?
There are traders, there are prodigies, and then there's legends.
We're up 4%, baby.
No way.
4 fucking percent. Buy the fucking dip.
Hey, who told me about IDEX?
Like, dude, what the fuck? Like, someone just made, like, a lot more money than me on my trade.
You find out life's this game of pennies.
Did you check the portfolio?
Pennies. The margin for error is so small.
I bet Warren Buffett never did that.
And they out there making money right now off of penny stocks.
Them two guys is putting in work to make y'all rich.
The pennies we need are everywhere around us.
Time to think big.
Pennies Going In Raw.
Featuring Dan, Deity at Dips.
And Hugh Honey. Produced by Vinny Strokes, baby.
Welcome back to another Pennies Going In Raw, brought to you by Benzinga. Benzinga has all of our favorite scanners, news alerts, and more. We use them every day when we trade. And YouTube, their YouTube account. Hugh, you been to it?
You know, once or twice I've been to it. It's pretty professional.
Nah, man, we've been on it. We've been on it a few times. Every single day they have Power Hour going on. They have live streams with great guests every single day. Make sure to check it out. It's with Hot Stocks Luke on youtube.com/Benzinga. Welcome back to Pennies Going In Raw. Today is Wednesday, March the 3rd. And, you know, last week was choppy. Starting to look a little bit better, though. Hugh, what are your thoughts on this market?
I mean, it was starting to look better until this morning. You know, we're sitting right at 385, which is between where we hit yesterday and where we closed last week. Last week being 380, yesterday or 2 days ago being 390. You know, so we're kind of in like this tweener zone.
Yeah, no, I mean, it's definitely at that point where it still seems like, not last week, but the week before last, where it's like, it's getting kind of shaky, you know? Still in one of those situations where, like we said last week, make sure to have that cash on hand. And, but one thing I think a lot of people are excited about, UWMC, man, was Rocket Mortgage that was running off of, that became like a Wall Street bet stock somehow.
Yeah. RKT was the ticker, and the short float on that thing was massive. And all it did was just keep squeezing shorts, which is kind of what we've seen. It just looks like the GME crowd moved to RKT.
Yeah, and then what we saw was UWMC act as a sympathy to RKT. They're both mortgage companies. Rocket's number one, UWMC is number two.
Yeah.
And you saw it run from what like $7.50 to $12.50 pre-market. It's crazy. I mean, wild. I mean, and off a sympathy of a Wall Street bet stock. It's like AMC to GME.
Yeah, exactly. And I'm really happy that you brought that up, because it being a sympathy means that it's not going up necessarily on the great UWMC news. It's going up because it's a sympathy
it's not
play.
Standing alone right now.
Yeah, exactly. So that's really important, that if you are trading UWMC, you have to keep an eye on that RKT.
Yeah, so definitely be careful as you're on it. But we just wanted to give it like a quick little market update before we dive into our interview with Brady. I know you guys have been asking about him a lot. And this interview with Brady is brought to you by Manesk.com. So what separates successful traders from bag holders? We talk about it a lot. Mentality, mindset, self-discipline. You know, would you agree with that, Hugh?
Yeah, 100%. Those are the two pivot points.
So day trader and entrepreneur Mark Bauer founded Manesk, a monthly art subscription service so that other desk jockeys like him could have something to look forward to coming in the mail each month. I mean, I love getting mail and I love getting surprises. Usually it's because I order things when I'm drunk, but this sounds like a lot better deal because through art, Manesk inspires mindfulness and minimalism, two key factors for maintaining a strong mental edge. The tiny desk art helps by serving as a reminder to take a moment to de-stress by doing breathing exercises, stretching, taking a break from the screen, or simply hydrating. Start receiving art delivered to your home or workplace when you subscribe at Manesk.com. That's Monesk.com. And you get $2 off with code PGIR01. PGIR01. All right, and today we have on Brady, a legend in the FinTwit and Atlas community. How are you doing, man? Thanks for coming on.
Hey, thanks very much. Appreciate it. This is my favorite podcast. So
Thanks for listening, man. We really appreciate it. I guess what a lot of the listeners really like to hear kind of start it all off. And I know it's kind of hard to make it chronological and easy to understand, but could you kind of give us your journey through trading and then what led up to, the 2020, the coronavirus, and how that has changed into what you were trading like today?
Yeah, no, absolutely. So I joined Atlas at inception. I was actually at Normac, so Cam's room before that. That was when I kind of met PJ.
It's funny, we've heard the story about Cam's room from like 3 different people, but we've never gotten a name from it. So this is the first time we've ever heard. What'd you say, Norvac?
Yeah, it's Normac. Oh man, I forgot the other part of it. Normac Newell. I think that's it.
That's a mouthful.
Atlas rolls off the tongue a lot easier. Okay, continue. Yeah,
I agree with that. But yeah, so I came over from Cam's room. I was actually just trading by myself before that, and kind of working on my craft. Had a few kind of mentors before that, and was decently profitable, but didn't really play with size. And then I kind of joined then, and that's where I met like PJ Ripster. Ripster was the education master over there, so I read a lot of this stuff. And that's when I met them. And actually, shortly after I joined, they decided to form Atlas, and so I came over with everybody when Atlas only had maybe 200 members, 300 members. But I was basically Ripster invited me. And then I kind of, started my way from the bottom, worked my way up. In terms of trading, I had always kind of traded fundamentally back in, I went to NYU, but that was, back when I was like 20. So I'm 30 now. And so, I would say like 3-4 years ago. So around when Atlas was created, or a couple of years before that, was when I started really trading technically. And that's when I really started to see more success. So instead of just using pure fundamentals, I was actually, analyzing patterns, some of the technical tools that I've kind of gone over in Atlas. And that was my start into kind of the technical world. And so my first start was doing all these like indicators and stuff. And, I actually did find success with a lot of them, but, my trading has evolved in the past couple of years, and, I'm basically getting closer to naked trading as we go, further and further. Although I use Fibonacci quite a bit, and yeah, that's where I kind of really started to blow up. I would say May 2020. So just recently.
So two things for you. My first question is, do you think, because I noticed you said you kind of tossed fundamentals and not tossed them, but you start trading more technically. Do you think that is becoming more of a trend now for a lot of people, just because it seems like fundamentals are being thrown out the window and now seems more technical sides of things?
Yeah. So, I would say, some parts of fundamentals do matter. But the thing is, if you've ever read Trading in the Zone by Michael Douglas, like, it's just, the fundamentals won't find you good entries. Like, what are you going to do every day? Let's say a stock, you think it's worth $100 and it's, 15. So you think it's undervalued. So you start buying it, and then you're just going to sit on your butt for, 5 years until it reaches, what you think it's worth. Right. So it's not very kind of, and, like Ripster puts it, technical analysis really gives you kind of good insight into kind of human psychology. And so, absence like all kind of, Fibonacci and all these other tools I use, I basically, cut it down to just volume price analysis. When I look at volume, when I look at price, I'm able to kind of figure out, hey, this is when they're stopping volume, right? When institutions, market makers are coming in to, potentially, eat up shares, right? Is that also near a kind of demand zone? And then that's when I start scaling in. How am I going to limit the time I'm in consolidation? So I would say technical analysis has, more, I don't know, I would say it's something you can apply live versus fundamentals, which is kind of more of a figment of your imagination. there are, obviously things that are important, right, to do due diligence and whatever. But, for entries and, whatever, I mean, that's where technical analysis comes in.
Okay, and my other question I had before maybe we toss you a bone real quick is you are the Fibonacci guy. Could you give it just a basic, just dumbed down for the listeners, just and maybe me, what the hell is a Fibonacci?
Yeah, absolutely. So, the way to think about Fibonacci is, there are ratios, right? Special ratios that appear in life, and they apply very well in trading. If you draw kind of your Fibonacci's or your levels correctly, you could basically figure out support resistance zones. So Fibonacci basically draws support and resistance zones for you. So a great example, let's just, take a great example of, Fibonacci retracements. So retracements are basically like, if a stock rips up really high and it's starting to pull back, you're trying to find an entry. So this, the 50% point is the key thing, the midpoint. So let's say, 0 to 100 is your scale. So $50 is going to be an area I always watch. When it drops down to 50, I'm going to be like, hey, what's going on? Then the other one is the 61.8%, which is about, 60 if you want to give it to. So at $50 and at $40, I'm going to be watching for potential bounce play. And so the word is potential because, if volume price analysis basically says that there's more selling pressure at, the midpoint, I'm not going to, try to catch a falling knife. I'm going to wait until the selling pressure kind of dissipates and starts to form a base. And then, I'll jump in because then I know that it's very likely to hold these levels.
All right, great.
Awesome. And when you're talking about, the fibs, is that how you find your plays? Is it based on, a scanner that picks up fibs that are near the 40-50 range? Or is the fibs, you find like a bigger picture trade with the catalyst or whatnot, and based on that, you decide an entry?
Yeah, so my scanners are actually based off of, I use these Thinkorswim scanners, and I worked on them with a friend, and basically, what it picks up is it looks for standard deviation. So, a lot of people use Bollinger's, right? And so, going back to statistics, right? Plus one standard deviation is 68% of your data set, right? Plus two is 95% of your data set. So basically what the scanner picks up is, plays that are near kind of your 68 and 95% standard deviation, probably the 68%, on a daily time frame, because I like to swing within I like to see moves within 5 days and then kind of 1 to 2 weeks. So that's what my scanner picks up. It's based on standard deviation. And then what I do is, because then I like buying dip plays. That's just, I know how to trade breakouts too. Not as well as Ripster, but like I love, buying dips. I love maximizing my time in them, meaning like I'm not buying the dip and waiting for centuries for it to move. And so basically, I see something that's sold off, right? Think about Tilray. I didn't buy Tilray until $23, because I was waiting for it to settle. I had high volume selling. I wasn't going to try to, go catch a knife. I could probably do a quick day trade, but, I waited for it to settle, bought it at 23, went straight to 30, literally in 24 hours. So that's kind of how I like to do things. I like to see it sell off, settle near one of my fibs or demand zones, and then I kind of go in.
That's awesome.
Okay, so I guess while you're talking about your strategy in general, I know we just talked about it on our very last episode. But you said this is a big way that you trade. You trade around your core. You'll buy the overreacted dip and you'll sell those rips. Is there anything you would have added to our last week's episode on Hugh talking about trading around his core position?
Yeah, so there's a couple of strategies I like to implement. So I guess, before talking about anything, right, I always swing with seasonal cycles. So when I see a weaker, kind of month coming, I'm not going to be like going all in. That's just not going to happen. And so, the way to think of seasonal cycles is you can split them up into winter and summer. I know there's, different seasons in between that. But November to April is, generally kind of a very strong time of the year. Right. So November is one of the strongest seasonal months. That's true. So November is typically super strong. We saw that oversold rally off the elections. You kind of knew that would potentially happen too, because 4 years ago we had something similar. December is also strong seasonally. You get like a Santa rally in some years. January isn't like, perfect, but it's not a weak seasonal month. And then we know about Feb, but Feb is actually a weak seasonal month in the middle of kind of stronger seasonal season, right? Because March and April are much stronger seasonally. So you basically, within like 6 months, you have one weaker seasonal month, and not all of February was that bad. It was actually just, a 2 week, it could be a 2-3 week stretch. So overall, in terms of strategies, there's a couple of things I like to do. So I consider the seasonal cycle, and that tells me, hey, should I play more aggressive or less aggressive? A little bit more cash and so on and so forth. Now, there's this concept of dry powder, right? Everyone's saying, hey, you should have cash on hand, you should have dry powder. But, there are times when, let's say you're buying the dip and it's actually a great entries, but it dips a little bit lower. Even if you get perfect entries, it will still dip a little lower when market, weakness is that strong. And that's what happened to me. Like some of my positions were down 10, 15% in small cap world. Some were down 5, which is actually fantastic because I think I got, kind of good entries overall, but they were still down because the selling pressure was so high. So, one of the strategies that, I learned from kind of the swing traders back when I was in Normac. I forgot his name, is Maroon something, but basically you recycle around a core. So the whole thought process is, let's say you have $100, right? And a lot of the skilled swing traders do this because how are you going to pay yourself? You're not just going to like sit in a position for 3 months, right? Just waiting for it to. You can do that, but you can actually pay yourself in the meantime to build up a cushion. Manage your risk reward and so on and so forth. So the way the strategy works is, let's say you have $100, like a lot of the weed plays right now are consolidating on a higher shelf, right? They haven't broken out yet. So today there was a pop. Yeah, but it was a 5-10% pop is nothing compared to all the weakness we had. There's a lot more upside. Even in the short term, there's at least kind of a 30-40% spread on some of these kind of more volatile, weed names. And so what I like to do is before they break out, I'll keep more of my core. So for example, let's say I keep $80 out of the 100, right? And then I will trade $20 of it. So for example, when Tilray went from 23 to 30, I kept a core of 70 and I traded the move from 23 to 30. Same thing with, I had S&D entries near like 128 and it went to like as high as like 160-ish or whatever, right? With the WSB kind of theme. Most recently. But, I didn't sell the core. The reason you don't want to sell your core is before it breaks out, you could be missing out on 80% of gains, right? And, if you're holding through this weakness and whatever, it doesn't make sense to take 5-6% scalpers that you would probably lose right away. So the whole way this strategy works, and a lot of people implement it, is you're recycling around the core position and then you have less of the core, right, as the stock starts to break out. So let's say Tilray goes to like 35. So it's close to my first target of 40. Then maybe I might only have, 30 of the 100 core that I had or 20 of the 100 core that I had. Just depends on your risk tolerance. And so I think that's one strategy where you can pay yourself, right, for these, smaller moves before you get the bigger move. And the best way to play these plays is you need to pick a chart that has kind of medium term upside, meaning like couple month upside, plus the shorter term 24, 48 hours, 1-2 weeks. Because in that way, your time frame, it's multiple time frame analysis, right? So, you have the daily working in your favor, you have the hourly working in your favor, right? More time frames gives you more confirmation. And so that's the kind of gist of the recycling around core strategy.
That's awesome. Yeah. And so did you kind of develop that on your own, or did that come with taking less risk off, or kind of, because to me, that's, even though we're both swing traders, I like to, I don't have that many responsibilities, things of that nature. So I usually just recycle around for more risk management. We all know that you work full time, which you're almost done, right?
Yeah, no, I'm excited about that.
Yeah. Do you want to talk about that a little bit? Yeah.
Yeah, no, I work in mergers and acquisitions. Buying, selling companies, two companies coming together. And I've been doing that for 5 years at this current company and then 2 years before that. So I'm 30 now. So it's been about, 7 years, give or take. And so now I remember when I first started, I worked 140 hours for a 9-month period. And that's legit, no exaggeration. And then,
like 20 hours a day, 7 days a week, 140 hours a week is what you're saying?
Yeah, no joke. And people who work in M&A will kind of know what I'm talking about. It's legit. It's not like fake. You actually really work those hours. So, and
that is wild.
Yeah, and so it was tough, and I actually liked what I did, but sometimes there's kind of stress on the job. Like I was always checking my phone, like I was on a date, with a girl I was going to marry back in the day, and there's just a lot of stress, and so I'm happy to actually be trading full time, but in order to get to this stage, I had to kind of build consistency. Obviously, having cash reserves is important, but if my trading sucked, my savings would just go down the drain. And I really looked for consistency and my ability to size with confidence and kind of develop my skill set. And I think I'm at a level where, I can finally kind of let go. I've replicated my income more than that. And I've been able to, just trade consistently very well, like have 40, 50 green days in a row.
Wow.
With obviously some pullbacks and, I can't do 250 like PJ, but 40, 50 is good enough. And, with the occasional, couple of red days and so on. And so forth.
How did you manage like the screen time it took to learn all of this while also working such a time demanding job? Like not only just learn it, but I mean, it seems like you're working this job every hour, then you sleep hardly at like an unhealthy amount. And then like how did you learn, especially to the point where you have all of this information that you're able to give out to everyone else nowadays?
Yeah, no, I had to sacrifice sleep. There was kind of no way around it. And I did utilize weekends because even if I worked weekends, it may have been, I'm a little bit, I kind of moved up the ranks. So, I started putting like 60, 70, and my most recent 2 years. And so the weekends there is some time, and then I use that to really study. And I think Hugh said something about like staying up late till like 2, 3 o'clock. Like that's exactly what I did. I stayed up late and I studied, and I had to kind of work around it, because if I never did it, I would never be at this stage to kind of be free, right?
Yeah.
I mean, it's just so.
I really like how you said that, because one of the biggest questions that I get is, how do I do this without taking a risk? And I really don't think you can quit your full-time job without taking a risk or sacrificing something. In your case, sleep.
I don't think you can do anything involving trading without taking a risk.
Yeah. I mean, that's awesome, Brady. That is really, really awesome, because a lot of times, we see traders who, they get into that revolving door of, okay, if I can just get to this point, then I'll quit. And then it's like, okay, well, I'm now only working 50 hours a week, so maybe I can keep my job, things of that nature. So that is really awesome.
I think another thing to kind of hit on is the fact we plan on dropping this tomorrow. It's Tuesday, March the 2nd right now. Is there anything that you kind of have seen? I mean, obviously the last week of February or last week, had its tough days. So a lot of the small caps are down 30%, and you're seeing a little bit of recovery, some shaky days this week, even though it's only 2 days in. But are you seeing anything current that you think a newer trader might not see that you'd like to advise them of?
Yeah, I can give a market update and also my views on kind of small cap world too.
I would love
it. What happened with so I'll start with small cap world is all these sectors like weed, EV, like every sector, defense, cybersecurity, doesn't really matter, like semiconductor, everything got crushed during this recent market weakness. Right. So you basically have a complete reset, right, where all these sectors, have a ton of room to go. And so any kind of, world headlines that come on, more weed legalization or like, cybersecurity concerns or drones or, whatever it may be, right, or like electric vehicle legislation, whatever is coming out, right, or batteries or, semiconductor shortage, so, once all that comes out, I think, that these small caps, the reason I have the portfolio that I posted, just on Twitter now is, I basically spread evenly kind of my sector exposure because I think any of these can get hits. And the goal is basically like, one of these sectors will run. I really like wheat because it has a kind of technical pattern built into it as well. And so, all these together basically say, hey, when one of these, so I'm basically positioned to benefit from the upside. And this also aligns really nicely. I'm looking at all these plays and they're looking like, a breakout in probably a couple of weeks, maybe sooner. Because, just how they're positioned, like in terms of the selling starting to die off, building a base, higher lows on some sectors like weed, and so, and that's actually going into a stronger seasonal month, right? April is one of the strongest seasonal months of the year, just for the market. And then March isn't, so once we're out of this little like loop, I think what's going to happen is the market's going to push up to 400, 405 kind of more optimistically. Those are kind of 2 fib level ranges I drew out this morning. And then, could pull back, a little bit, so on and so forth. But ultimately, I think what happens after that is it does a melt up. So melt up meaning like there's just a large increase in prices over time. It's not like going to be, a one shot 100% move, but it's, it's going to move up over time. And then I think there's going to be a much bigger correction after the melt up is over, because after a melt up, is a meltdown. And I think this guy, Walrus Trades on Twitter that I actually forwarded recently, he does Elliott Wave. I do kind of a little bit, fibs, but, we have a similar theory where the market kind of melts up and then it's going to melt down after that. And then after that, I think the next 2 years are going to be very bullish for the market. So like, despite, this bigger correction that I see coming, I think the market's going to be super bullish. So, and that would kind of fit to kind of Hugh's theme where he says that you see a reset in, maybe penny tickers twice a year, right? Where you see a complete sell off, all the sectors are now back to ground zero, right? And they're going to kind of work their way back up. And so that would kind of align nicely with the next correction as well. But before we kind of think about all that, I think, current price action, I know people are like worried, but, it was good to see the big move yesterday on good volume, above average volume. Typically you see, when you see like a reversal in the market, it's a 3 to 10 day period. So meaning like, after, a bunch of red, you see multi-day upside and 3 is the minimum, right? That's basically like how market cycles kind of work a little bit. So that's basically what I see, 400, 405, pull back and then like, push up to much higher prices, which I'll have to kind of look into in more detail. Then the meltdown probably on a weaker seasonal month. And then overall, I think it's just going to be super bullish after that. So you have a bigger correction to factor in and then just kind of super bullish, throughout for the next couple of years.
I think that's awesome. Yeah. And that kind of aligns with our, with the thesis that I was kind of, that I've been throwing out, but yours is way more in depth and, you have great insight. How do you think that, do you, I know you talked about a timeline, but do you think of a specific timeline? You said a weaker seasonal month. And as far as your portfolio goes, do you still think that we'll see crazy runners, 300%, 400%, 500% later in the year when we're out of this stage of your thesis?
Oh yeah, no, absolutely. For sure. I mean, cause obviously the COVID market brought a lot of people to trading. And then you had the, Wall Street bets theme, which, brought even more people to trade. And I know that because I think both PJ and I had like a massive increase in followers in like one day. I saw like a 10K increase, which just doesn't make any sense. And so I think that was probably from some of the, Wall Street bets, later. So that basically just shows you that there's a lot of, kind of people, flocking to the markets and then more stimulus and all this. And, Fed keeping rates low, right? I know there's going to be some, but, I think, they're going to keep rates low. And so, we have a kind of, Fed supportive environment, unlimited QE, which is like insane because back in 08, it was just regular QE and that was already great. And so, quantitative easing. And so yeah, I think, the markets will definitely see that there's too many people doing this and going full time and doing whatever that, for them to just all disappear overnight. So it's only going to get better and better over time on the retail side.
Yeah. And how do you think interest rates, if we do see an increase in interest rates, let's call it in November, let's say that 70% of the population is vaccinated by July. And then by November, we raise interest rates. How do you think that that'll play a hand in the overall market, if any?
Yeah. So the thing is, when they initially, increase interest rates, like I don't, it could have a little bit of a, kind of short-term effect, but probably not a long-term one, because it's not like they're going to increase interest rates, like continuously, like rapid fire. It's going to be kind of slow, most likely, based on statements and what I've seen in the past and whatever. So, it could cause some volatility in the short term and probably a weaker seasonal month. The reason I keep mentioning this is some event usually comes up to basically have seasonal cycles repeat, just like patterns and stocks and whatever, like some random event just causes, these things, because there's no way you could have known that weed and BTC were going to pop, except, BTC does 4-year cycles, right? And it's coming up on a 4-year cycle, and it's literally repeating what was happening from years ago. And so, I think, the whole thing is that, some of these technical patterns are predicting what's going to potentially happen. And I think, I don't think it'll be a big deal. Like, I think, it could be short term, but it's just this, it's almost like earnings. It's like a short term, flop, but then it'll eventually get back and kind of, be bullish for the next couple of years.
Awesome.
Whenever you have all these educational resources and you mentioned a lot of things, I think, people are going to want to know more about. Like, I want to know more about like the seasonal rotation and everything. Where would you recommend to kind of find all this?
Yeah, absolutely. So, in Atlas, there's a channel, it's called Brady's Education. So I kind of put, those kind of represent all the tools, resources I've used kind of over time. You're not supposed to, I see some people like combining them all together. You're not supposed to use 6 indicators together. But, long story short, what I've found most success with and, my current system is, I think, a must-read book is, volume. I think it's a complete guide to volume price analysis by Anna Cooling. I think that book really opens up, how you should kind of think about the market. That basically like, hey, these bigger guys are buying at, wholesale prices, right? And they're selling to you at retail prices. So that's the first kind of mindset you need to get. And then volume price analysis, I think, is key. No matter what technical tool or whatever, right? If you can kind of train your mind to be able to look at volume and price and know what's going on. So, for example, like when the market rallied and then kind of fell, you could have seen that the rally that happened was on lower volume, meaning that, this might not be the sustained move up, right? So those signals like that would help you reallocate, would help you recycle your core and whatever. So I think, that book's really good. And then I have a corresponding book that she did, 400 something pages on just examples of volume price analysis. It's right there with the volume price analysis book. Can't remember the name. I think it's like Stock Trading Investing and with volume price analysis. But long story short, I think that's a good kind of core skill to have before knowing anything else, and then from there, like you kind of figure out what style appeals to you. So I think those books are really helpful. And then I also like Japanese Candlestick Techniques, whatever, by Steve Neeson. So because, Anna Cooling talks a lot about volume price analysis, but then, do you know what the candles are, right? Yeah. And so it's a dry book, but I think building that foundation is good. And then you can kind of, patterns and do whatever you want, EMAs, like whatever you're comfortable with, Fibonacci. They all kind of just show you like support, resistance, supply, demand, right? Whatever works best with you. That's whatever tool you should kind of incorporate. So basically look through the channel and see what resonates with you the most. But I think that core volume price analysis will make whatever method you use really good. So,
okay. Well, one last thing. Aside from recommendations for resources and stuff to the new traders, is there anything you just want to tell, someone that just started trading or just became profitable, like so many other people in the past year, or just someone that's struggling in a time where they see everyone making all these gains? If you have anything to maybe tell those new traders.
Yeah. So I think you need to have a trading journal. You need to write stuff down. And I don't mean just like, buy, sell this many shares and then, I'm done. I still have a trading journal. I've had it for, years, 3, 4, 5 years. Can't even remember how long. But what I do is I write down the personalities of all these small cap tickers, even mid and large cap tickers. The reason I know like, Palantir, Virgin Galactic and Tesla, the reason all those projections were spot on was because I saw a pattern in the way they traded. and they always hit the levels like kind of with 90% accuracy. So, irregardless, like, take notes on all the tickers that you trade, because when you know its personality really well, that gives you an edge. The next time you go in, you know how it moves, you know where it's likely to move. So take notes on all your trades. And I think that's a big takeaway. So.
And last thing, if I'm 22 and I'm working at JP Morgan and I'm in investment banking, working 80 hours a week, and I want to get out of the grind, what helped you stay motivated during that time? Because you have a good job. You worked inside a great field, great money. What kept you motivated to get to this point?
So, from when I was young, I grew up, kind of, poor. My brother and I were, we were watching like Knicks games with, like holding up like the TV wire and stuff. And so I was really motivated to do well. And, I was very happy to kind of get into M&A and, very kind of happy for the opportunity I was given. But I always thought that I could go a little bit further. I wanted to kind of get to my level, my boss's levels, my supervisor's levels, and probably beyond. And I wanted to do it at a young age, not when I'm like 70 years old and have, no time to use my money. And so that was my motivation to just like, really like go above and beyond. Obviously I dealt with some family stuff when I was younger, where, my brother and I kind of received a little bit of criticism because, we didn't have as much money or whatever. And, I just wanted us to really like, take it far. So that's always been my kind of motivating factor. He's a, GI doctor right now, and I'm super kind of proud of him. He kicks
awesome.
ass.
That's awesome.
Oh, he recently quit his job. He's going to like be a partner and have an equity stake in a hospital. Like,
wow.
So, like all this, like, we both came from nothing, and that's what's driving me. And my goal is to just kind of be my own boss and like really shoot even farther than I ever did. And like, provide for my mom. Like, she was always there, and just to kind of take it far, there's no reason that you can't be the next, like CEO of some Fortune 500 company. I may not be realistic for whatever, but you can't just because it's improbable doesn't mean, you don't go for it and you give it everything you got.
That's awesome.
Okay, well, I think that's all we have. Now that I know Fibonacci isn't an anime character, and now that I know you are not Tom Brady trading with us during the day. Two very important things I learned. I'm actually I got commented on Twitter, and I was like, just Kenny saying something about trading books, and I was like, I'm pretty sure Brady just recommended those. And I was like, wait, no, all trading books have like the exact same name, so you may need to go clear that up. But no, really appreciate having you on. Definitely we're gonna eventually run this wire again and have all these people on again, and hopefully soon, because you were a great guest. I'll be honest, you were born to be interviewed. Very well spoken and smart, and we loved having you, man. So thank you so much. If there's
absolute awesome time, Brady,
to push, feel free.
Thanks very much. Appreciate it.
All right, man. Sounds good. See ya.
Take care.
All right, guys. I hope you guys enjoyed that interview with Brady. He is awesome. If you guys love our content and love this interview, please give us that 5-star rating. We don't ask anything but that. That really helps us out. And we will see you Sunday.